Hello, everyone, and welcome to our webinar today. My name is Sarah Maslin, and I am a correspondent for The Economist, based out of Sao Paulo, Brazil. I have the pleasure of being here today to moderate this panel on bringing a new level of transparency to the financing of commodity trade and deforestation. We have some really exciting panelists who are much more experts in this area than I am. But I wanted to first just welcome all of you. We have in our audience today a diverse group, people from the finance sector, trade companies, civil society, and other journalists. We have people from lots of different countries. So the webinar today will be in English, but we have live interpretation in 3 languages. We have Portuguese, Spanish, and Indonesian Bahasa. And you can use these by clicking on the interpretation button below. It's at the bottom of your Zoom screen, and selecting your language of choice. You can also block out the original audio if that's easier for you. And I wanted to encourage everyone to use the chat box for conversation, and feel free to add questions to the Q&A. We will answer as many as we can, and then the rest will be answered via email. But without further ado, I wanted to welcome our panelists. We have Emine Isciel, the head of climate and environment at Storebrand Asset Management. We have Hilde, Jevan, the chief advisor at the Council on Ethics for the Norwegian Government Pension Fund. And we have Shona Hawks, the Senior Global Policy Advisor at Global Witness. And then as well with us today, we have Helen Bellfield, the Policy Director at Global Canopy, and Toby Gardner, the Director of Trase. Well, so I wanted to just set the scene very quickly. Earlier this year, I was doing a story on the connection between companies in Brazil, specifically meat and soy companies, with deforestation, and was lucky enough to use some of the trace data. But something sort of interesting happened while reporting this story, which is that I was really interested in speaking to banks and other investors about the risk that these companies posed. And I got in touch with a bunch of them and ended up sort of printing this in my article. Morgan Stanley, Itaú, and Santander, which are banks that I'm sure most of you have heard of. And I had trouble getting analysts to speak with me about these companies, which was a signal to me that this is a topic that is very much and it kind of complicado is the word that they used in Portuguese, but it's something that is increasingly important to investors. And on the other hand, we've seen in the past few months some signs of the growing importance in the finance sector of tackling deforestation. We've seen the divestment from fossil fuels. We've seen major European investment firms with more than $2 trillion in assets saying they would divest from soy and beef traders if they didn't see progress. We've seen investment arm of Nordea, the largest financial services group in Europe, dropping one of the Brazilian companies from its portfolio. So my understanding as a journalist is that we're sort of seeing the very beginning of progress, but there's still a long way to go. And I guess the question that we're trying to kind of tackle today is how to get to what needs to be done and what tools can help us with that. And without further ado, I would like to turn it over to Toby from the Trase team to just tell us a little bit about Trase Finance and how this new tool can help get us on that path. And then we'll talk even more about it in a moment.
Thanks very much, Sarah. I think what we're witnessing is a step change in recognition of the role that the finance sector has to play, galvanized perhaps in particular by the viral coverage of the unprecedented fires in the Amazon in the last 2 years. But it's led to a step up in appreciation by the finance sector and many others of what can be done to help transition economies and supply chains, in this case, onto a more sustainable footing. And one of the big challenges facing this is how we can discriminate how financial institutions, how investors, how lenders can discriminate how to target green finance and how to identify where the greatest risks are. And if I can have the next slide, please, Helen. And what we've seen in the financial sector has been a real boom in the importance of ESG, environmental and social governance indicators. But as anyone who's familiar at all with this sector will know, these data are often, unfortunately, incredibly crude, incredibly coarse, and when looked at in detail, they often don't necessarily correlate with changes in sustainability performance on the ground. So to achieve the discrimination that's needed in order to better target finance to be in support of rather than running against sustainability goals, we need data that can help give us more granularity, but we also need data that can provide the scale of coverage to look at entire sectors of an economy that is the target of investment. Next slide, please. And this is what really is behind the work that we're doing in Trase. And Trase is an independent science-led initiative to bring transparency and intelligence to our understanding of the trade and financing of commodities linked to deforestation and other impacts across the world. Commodities that are often the mainstay of many economies, and in many of the places where they're grown and produced, there are no problems associated with deforestation, emissions and related impacts. But in other places there are. And what we've developed in Trase is an approach that tries to balance that critical need for granularity whilst also delivering scale. So we've developed an approach to mapping supply chains that link subnational regions of production for commodities like palm, like soy, beef, cocoa, to the countries around the world where they're imported via the individual companies that trade them. And in doing so, we hope to both enable market actors, companies, investors, governments to make more effective decisions in managing risk and targeting investments, whilst at the same time strengthening the work of organizations who are focused on building and strengthening the accountability and progress towards delivering on sustainability goals. And next slide, please. And what we've launched now, a few weeks ago, is a prototype of our new area of work on Trase Finance, which builds on the work that we've developed so far in Trase Earth, which is now mapping more than half of the global trade in commodities linked to deforestation in terms of total volume. We've been able to link on top of that for the particular sectors of the Brazilian soy and beef exports and Indonesian palm oil exports, a new level of mapping on the ownership of companies, the legal parent structures that are often opaque or invisible to external entities, and also patterns of investment and lending towards those companies, allowing for the first time a connection between investors and lenders and the production and associated impacts of commodities that are produced and traded by companies in which they're investing and they're lending to. And Helen will take us through in more detail the platform. I just want to make clear that this is very much a prototype. We very much welcome feedback and ideas and critique on the ways in which these data, analyses from these data and the tools that we've developed to help understand and access these data can be made as useful as possible, both to improve the effectiveness and the targeting and the ultimate success of risk management, and also to help strengthen accountability across the sector as a whole, so we can catalyze the change that we all know is so urgently needed. And with that, I will hand back to you, Sarah, and let us kick off the discussion. Thank you again for joining.
Great. Thank you, Toby. And you've given us enough of a preview that now we all want to know more about this new tool. But I guess first I wanted to just take a quick step back. I spoke a little bit about how sort of my work as a journalist, I sometimes come in these, challenges of navigating how these companies work and what kind of leverage, different actors might have, including the finance sector, in influencing these companies and pushing them toward a better relationship with the environment. But one thing that I guess I'd like to ask each of our panelists to respond to very quickly is why is a tool like this necessary? How is action around sustainable finance limited by data or the lack thereof? So why don't we kick it off with Hilde, if you wouldn't mind answering that question briefly, and then we can go from there. And make sure to unmute your microphone.
Okay, better now? Can you hear me?
Yeah, yes, we can hear you.
Okay, thank you. Yes, your question was why is this a tool like this is necessary? I think this is a very powerful tool for investors or for the finance industry, because it enables organization like ours actually to see where the risks are highest, where are the hotspots actually for us, and it's what we are very concerned with is because the way the Council on Ethics work is that we need to establish a link between the companies and the deforestation actually taking place. So we really want to see what's going on the ground. Many investors, and I guess that is because of the lack of data, have been focused on the policies, the commitment, the disclosure, the reporting, but it doesn't really get a good give a good picture of what's the impact is, what's going on the ground. And I think with being able to go back into the origin of where a company sources its commodity, for instance, the cattle, it gives another picture and a more realistic picture of where the risks of deforestation lies. Thank you.
Great. Thank you very much. I'm going to turn it over now to Emine, and one thing perhaps you might mention. I mean, one of the kind of really important strategies of Storebrand is to work together and coordinate actions with other investor groups. So, I mean, with the same question about how how data can serve sustainable finance, I wonder if you might answer how that can be done also when you've got a company that's got all sorts of different investors that really need to band together.
On what Hilde said is lack of reliable and consistent data has been limiting actions around sustainable finance. I think right data is crucial to guide investment decisions and steer capital away from unsustainable business practices, including away from companies that are involved in deforestation. So as Toby said, what we're witnessing for the past 2 years is that there's an increasing awareness around deforestation and how tropical forests play an important role both in climate change but also biodiversity protection. In the past, investor community has been more focusing on the energy sector, but we see a shift now to land use change and deforestation. Despite all the awareness and commitments that we have made, the investor community is still finding it challenging to identify risk and manage deforestation risk in a systematic manner. And Storebrand just issued a report on data and deforestation where we already have tools, 10-15 tools, and we assess the different tools and databases. The conclusion is that there is basically no single tool that cover all our needs. They have different coverage, methodology, quality, and there are also clearly missing data points, especially upstream companies. I think we will come back to this question later on, which is making it challenging for us and other investors to map our portfolio exposure to deforestation risk. Having said that, I think waiting for the perfect data can also sometimes be an excuse for inaction. And you don't always need the most advanced data, but you just need the right data. And I think that's why we are gathered here today to discuss whether Trase Finance will give us the right data to drive the change we need, right? So I'll leave it here.
Thanks a lot. Thanks a lot. And I'll just turn it over to Shona to answer the same question about how data can help, and how in the past the lack of data has proved an obstacle for both finance sector, but also groups such as yours that they're working to try to push these companies and these investors in the right direction.
Yeah, and thank you so much for having me today. It's great to be part of this conversation. And I think also some of the points you talked about, but what we're seeing is a shift in the global economy from an oil-based economy to a land-based economy. So this is an issue that is only going to become more prominent. To put it frankly, if you're a bank or an investor and you're doing your due diligence into a high-risk company, a company that's operating, for example, in the middle of the Amazon, the only way that you can actually do due diligence on that company is if you insist on the supply chain data. It's that simple. You can't know what the company is doing in practice unless you have the data. And companies aren't providing that data because the financial sector isn't insisting on it. Banks and investors aren't saying, we will not give you money unless you can show us your supply chain and show us how it's working. So I think what the Trase data does, which is really important, is that it shows that you can get data, that this is possible. But I think it also increases, it throws back to the financial sector and says, if you don't have an evidence base for your due diligence of high-risk companies, what are you doing? And what is your complicity in driving deforestation? So we're really excited to see where this conversation goes from here, as it's a really powerful tool to show that if you're $1 billion or $1 trillion fund or bank, you can find ways of disclosing this data.
Thanks very much. I'm also really excited to see where this goes and to learn more about Trase Finance. I mean, I've used the Trase tool and found it very useful, and and seen how it has been used by other journalists and now by investors to learn more about these companies and hold them to account. But my suspicion is that this new tool is going to help in slightly different ways from the original Trase commodity supply chain tracking system. And so with that, I would like to turn it over to Helen to tell us more about how Trase Finance works, and also just mention to the participants that we're going to be running a poll, which you should see at the bottom of your screen during this presentation. And the answers to the poll will help direct where we go with this conversation after the presentation. So please do take just a moment to answer, and then we will come back to that afterward. And thank you very much, Helen. Take it from here.
Thanks all. Can you hear me okay?
I can hear you fine, and if there's any problem, I'm sure we will hear from our panelists via the chat.
Perfect. So as Toby said, Trase maps the supply chain of agricultural commodities, and therefore we're able to connect trading companies to deforestation risk from their link to their sourcing regions. So just briefly, what Trase Finance is doing is mapping the financing of those commodity traders, and therefore the deforestation risk exposure of
Helen, could you speak up a bit? Just maybe, yeah, get a little closer to the microphone. We're hearing that it's a bit quiet.
Can you hear me now? Is that better?
That might be a little bit better. No, not really. Not really.
Okay, I'll try and shout.
That's better. That's better. Yeah.
Okay, I will shout, and thanks for the feedback. So in mapping the financing of these commodity traders, we're able to map the deforestation risk exposure of investors and lenders. So I'm going to briefly touch on the methods and data, but please do go to the Trase Finance website, where we have much more detailed methodology and data sources documentation. But from a starting point, so Trase estimates the deforestation risk exposure of traders, as we've said. So firstly, Trase Finance maps the legal hierarchies of companies and aggregates the deforestation risk exposure that they may have in subsidiaries to the parent company level. We then map the equity, bonds and loans to commodity traders and therefore their associated exposure to deforestation risk. And beyond this, we also look at their indirect exposure via, for example, where an investor may hold shares in a bank which is then lending to a commodity trader. So this is the basics of what we're doing for Trase Finance. So firstly, Trase Finance is for financial institutions, both in supporting their risk management processes, but also in enabling green product innovation as well. And we'll go into later on, I'll just touch on these applications and give a few more examples. And as Shona touched on, the second use case is very much for those looking to strengthen the accountability of the finance sector and increase transparency. So for this first beta version, Trase Finance covers 5,000 companies that are importing and exporting Brazilian soy, Brazilian beef and Indonesian palm oil, and more than 12,000 financial institutions which have equity or debt in these companies, as well as many others who have indirect exposure. So moving on to the applications. So a key use case for Trase Finance is, as Emine said, is in portfolio screening. So identifying the high-risk companies. So using an example from Norway's Global Pension Fund, hopefully we can see here that the pension fund has holdings in a number of commodity traders that have high exposure to deforestation risk, so Bunge, Glencore, Marfrig, but it also has indirect exposure via holdings in a number of banks. So here is an investment bank, BTG Pactual, which itself has holdings in JBS. Another example of this indirect exposure is via the pension fund's holdings in Maybank, which is a regional bank based in Southeast Asia, which has a lot of lending to palm oil companies. So diving in, we can see that if we search here, we can see that Maybank's exposure comes from its lending to palm oil traders, including Sina Mas, amongst others, which have exposure to deforestation risk from their palm oil exports. So hopefully that's a view for how portfolio risk screening can be enabled by Trase Finance. So focusing in on specific companies, bringing together red, amber and green flags around risk exposure. So for example, if a company is sourcing from a deforestation frontier, such as Mato Piba in Brazil, company mitigation actions, so whether that's policies or membership of sustainability platforms, and also violations, for example, fines from enforcement agencies or grievances raised through RSPO or other mechanisms, can support banks and investors in their due diligence, and also in targeting questions in client engagement as well. So shifting more to the opportunity side, as Toby and Sarah mentioned, we've seen a real boom in companies raising capital through green bonds and sustainability-linked loans. But in many cases, the covenants and restrictions in these loans are opaque, but often they are focused on specific companies where they may be high profile or from a campaign and have high reputational risk. So for example, we have this well-known case where Greek Seafood excluded Cargill as part of a green bond, but actually the picture is much more complex than that, as we all know. There's many traders who all have distinct risk profiles, and this is where we hope that more robust data, such as Trase Finance, can support the development of more robust sustainability-linked loans and green bonds by informing covenants and restrictions. Another case for in terms of product innovation is around strengthening ESG indices and ESG frameworks. So as we know, and as Toby said, a lot of ESG funds have direct and indirect exposure to deforestation risk and aren't accounting for this. You can see that in Trase Finance. For example, there's this BlackRock managed ESG fund linked to MSCI indices that has direct equity holdings in both ADM and Bunge, which have significant exposures to soil deforestation risk. So there's an opportunity here for this data to strengthen these ESG frameworks. So in terms of transparency of legal hierarchies, this can help strengthen accountability, but also increase visibility for investors who may be lending to or hold equity in the parent company or in specific subsidiaries and not have a full view of the indirect risk around the whole company. And furthermore, on accountability, we can see that a number of banks have started to make public commitments and policies around deforestation, such as Storebrand. And so here I'm using the example of BNP Paribas, which has the highest score on the Forest 500, which assesses its public policy on deforestation. But you can see that actually it scores quite poorly on reporting and implementation. And going to Trase Finance, we can have a look at its risk exposure to deforestation from commodity trading companies. And if the video works, so we can see that here it has exposure from both equity and debt. So looking at equity first, we can see that it has holdings in Brazilian soy, beef, and Indonesian palm oil companies. And also here below, we can see that it's also lending to a number of these companies as well. So you'd expect that BNP Paribas, as part of its policy, would be engaging with these companies to understand how they're reducing their exposure to deforestation, and you'd expect to see that in its reporting on its policy and its progress. So taking a step away from specific applications, this data can also help us identify some fundamental questions around who are the financial institutions with the most exposure, what are the instruments that are linked to and are being used by companies with the highest exposure, and also what are the leverage points to influence trading companies and ultimately to shift capital in a way that we want to see. So we hope that not only ourselves but others listening on the webinar will be hoping to address some of these questions through the data. So finally, what's next? So this is the beta version, as Toby said. We'll be looking to expand the coverage to the other commodities that have been mapped by Trace Earth and to add in some more indicators, particularly around emissions from deforestation, which we know is a key interest to the finance sector, and to also bring in some of the asset data we have on mills, slaughterhouses and silos. We'll be testing some of the applications I've run through today with users to improve the tool as well. So look forward to working with many of you on that. And just to end with, just like to say this is the first step. So this is a beta version of the tool. We'd really like to see many of you work with us to improve it and to make it as effective as possible in enabling the finance sector to shift capital away from those companies that are driving deforestation. So thank you for listening, and I hope that was a useful whistle-stop tour of the tool, and looking forward to the discussion.
Great. Well, thank you very much. Well, let's see. First, I think I will share the results of the poll, which I think everyone should be able to see it now. It makes my job much more difficult because, as you can see, everyone has a different priority, and people are interested in every single one of these 5 questions. So we will do our best to address as many of them as possible. And again, we're also receiving some questions on the chat thread, so and on the question and answer. So please feel free to send in your questions, and I will try very hard to make time for them. I wanted to just start with one question of my own, a couple of the panelists mentioned earlier that what we're seeing now is some movement away from an oil-based global economy to a land-based one, and so we're seeing some positive signs coming from the finance sector starting to divest from fossil fuels, but we haven't yet seen that with land use change. So I guess one thing I'd like to know, and I'll start with Emine, because it was you who mentioned this. What are the main differences and sort of different challenges when it comes to positive progress on deforestation and land use change as opposed to oil and fossil fuels?
I think, first of all, there are two different issues. I think deforestation and the sustainable supply chain is so much more complex than the oil and gas sector. And I think data has been one major challenge for us, but I think also it's been difficult for us to, I'm talking on behalf of Storebrand, to map our portfolio exposure to deforestation risk. What we're seeing in many of the tools that exist today is that they don't cover downstream retailers. They usually cover upstream companies, which makes sense because deforestation is generally caused by upstream companies who own or lease concessions. But most international investors, equity investors, have limited exposure to upstream companies, partly because they're privately owned, or partly because most listed companies are based in emerging markets and are sometimes too small for investors to invest in. So it's a much more complex landscape. And it's not only about emissions and climate change, it's about biodiversity loss, it's about the right of indigenous peoples, and all the different commodities that we're looking at. In the past, we used to focus on palm oil, and with our deforestation policy, which we adopted in 2019, we widened the scope of our policy to also cover soy, beef, cattle, and timber. And it's all the different commodities, they have different challenges and different solutions. So from my perspective, it's a much more complicated landscape.
Right. Thank you. So what do you do about that then? Hilde, I'd like to hear from you as someone who's having to make these, these concrete decisions. What are some of the changes in how a fund like yours assesses agricultural commodities companies in the coming years, and what are some of the changes that have been made already, and what are some of the changes that could be made to start to tackle this complexity?
Yeah, it's there's a division of work between the Council on Ethics, which and the fund manager. So the Council on Ethics is an independent advisor actually to the pension fund, and the pension fund is managed by the central bank. So we do recommend the exclusion or observation of companies to the bank. And the reason for our recommendation is, of course, if the company's actions are inconsistent with the ethical guidelines for the fund. So we have a quite narrow mandate. That said, we see that both the council and the fund are working on similar issues, but from a little bit different perspective. But climate change has been a priority for the bank for many years, and have engaged with companies mainly on policies and reporting and disclosure, while we have been more focused on the big emitters and to what extent these emissions they have and the actions they do are unacceptable and should be excluded. So that's it. It's been more a parallel work with an environmental perspective. We worked on deforestation almost 10 years at the council, but we have focused on the fund's direct exposure, and we have targeted the the production companies, the growers, for instance, in palm oil, and the timber companies. And we have also looked into the meat producers in Brazil. But I agree with you. The deforestation and biodiversity loss has really become at the forefront now of our attention.
Mm-hmm. And question for Shona. I mean, what are some of the steps toward overcoming some of these challenges of complexity and the sort of main bottlenecks for the finance sector's engagement in this area, in particular with these kind of complex ownership structures of these big companies and their suppliers as well?
Yeah, I think the core of the problem is that no one loses money off deforestation. You know, banks aren't losing money, investors aren't losing money. You can make money off these companies, but you can never lose it. And that is the heart of the problem. And I think we've seen previously on, this is where we were on fossil fuels 5-10 years ago. And so I think, a key aspect of this is that I think the financial sector's starting point is often what's comfortable rather than what works. We have a lot of conversations with the financial sector, and banks will say, well, look, it's not us, it's the investors, and credit rating agencies will say it's not us, it's someone else, and investors will say it's not us, it's someone else. And every time a business which is in charge of billions or trillions of dollars makes a statement like that and says we can't go further, we can't innovate, we can't do more to hold ourselves accountable, that's saying that we expect Indigenous communities in incredibly marginalised circumstances, we expect smallholder farmers, we expect rural women to do this job of stopping deforestation. And that's not their responsibility, it's ours. So I think part of it is a mindset of understanding that, it's not that the financial sector is at arm's length from this. Every time you put money into a company without insisting on that basic accountability, what you're doing is creating confusion for those companies when they're hearing from consumers and they're hearing from communities. We need you to act, and we need you to act now. The businesses that determine their share price or the interest rates of their loans aren't insisting on that same thing. So we think that the starting point is really to say, what's going to work? How do we make ourselves accountable, and how do we shift that? Personally, Global Witness is quite invested in seeing some of these new legislative frameworks and seeing where finance may fit into that. But I think what's really needed is a mindset change, both as an employer of an investor or a bank, but also as humans. There's no economy if we don't have a functioning climate, basically.
Right. And I see that we're getting lots of really specific questions about how the Trase tool works. And I think for most of those specific ones, we are going to be responding to some of those via email, and also, in the coming days and weeks, publishing more information about Trase. And all of these questions actually will probably influence how the tool is built and tweaked. But one question I would pose to Toby is, I'm having some people ask about, what level of interest have you received from the finance sector? Someone mentioned big guys like BlackRock. To what extent are people kind of receptive toward these types of tools, and how would you kind of break down the different kinds of funds and firms that that are invested in these companies?
Yeah, thanks, Sarah. So we're in the early days, but what I would say is that the level of receptivity that we've had from the financial sector has been incredibly positive. Of course, as is inevitable with these kinds of endeavors, we've engaged first and foremost with the more willing actors who are out in front and trying to push the rest of the industry. So we've engaged with quite a few leading institutional investors and pension funds We've gone through a round of testing of the tool, but also critically the data underneath the tool, of about 30 institutional investors during the summer, as well as a number of regional banks, some of whom have already been using Trase data as one of their input criteria for screening loans on their loan books to commodity traders in the countries in which they're working. We've also engaged with some of the data providers that many investors rely upon as inputs to their own ESG services. We have a collaboration together with Refinitiv as part of this work. And one of the things that we would like to really see is the ability for data like Trace's to input and be integrated into improved ESG scores. So there are bread and butter products out there that, despite easy to level criticisms as to their accuracy and to their coverage, they are seen as, they have a certain legitimacy in the marketplace because they're there and they're provided by credible providers. So how can we integrate trace data and other data into those products to improve them and have a new generation of ESG scores? Because there's nothing worse in many ways in having indicators that give a veneer of sustainability because they are very coarse-grained or very crude and perhaps far removed from the actual impacts on the ground. As per Hilde's original comments, maybe they're based on very high-level measures about policies or places, countries even, where a company is operating. So the more that we can ground these measures and have them validated and do periodic testing to look at whether companies or funds that are given higher scores are actually related with higher levels of sustainability performance on the ground, and is the discrepancy, the divergence between those two things being narrowed over time, then all the better. But I mean, as others were saying, there are a lot of other players in the market, especially regional banks, who are much more on the forefront of financing expansion of agricultural commodities into regions where they're causing more deforestation. And having direct engagement with them, of course, is harder because they are many. They're harder to reach, but there is a real opportunity for engagement via major institutional investors who convene round tables of these banks within which they have holdings. So there are multiplier effects that we can capitalize upon to try and get the message out there and encourage. I mean, to Shona's point, what we urgently need is a much more coordinated and collective level of action and less book passing between different actors, because everyone in this game has a stake in the problem and therefore has a stake in the solution. And sharing the burden of the problem is what's going to make it actually tractable and actually achievable to deliver change at scale. I mean, just one final thing I will say is none of us here should care unless you are a particular company or a particular bank as to the performance of that particular company or bank. We want to be looking at the aggregate impact. If you are a company, of your peers, of the sector overall, if you are an investor, of the overall capital raising that's going into your assets. Because unless we're able to do that, what we'll see is that individual players at the forefront will be able to clean up their own portfolios and their own supply chains without necessarily knowing whether they're contributing towards a positive change, a net positive change in impacts on the ground.
Right. I wanted to turn it back to Shona and sort of a question on this, this idea that there needs to be an across the board change of mindset. We've been talking a lot about the companies and their suppliers and the communities that they affect, and then the finance companies that are investing in them, and the banks. But what about governments? We've had a couple questions about this. So I wonder, Shona, if you can comment on possible legislation that's been talked about in the UK and Europe, and whether some sort of kind of due diligence requirement that comes into legislation, whether that should include the finance sector or whether it's just these links are just too complicated to make that viable.
Yeah, I think the key point is if you're a bank or an investor with a policy on deforestation, you should be completely behind these laws and you should be completely behind them covering finance because it will level the playing field. which is what we keep hearing. So it would be brilliant. I really urge any bank or any investor on this, on this call to speak out publicly in favour of these laws and in favour of them covering finance. What we've seen in a very short period of time is just how much the dial is shifting on that. We don't know if finance will end up in the final laws, but what we're seeing is this elevation of finance isn't outside the supply chain. It is a critical part of it. It is critical to how companies make decisions. It is critical how governments in forest-rich countries make decisions. Finance is integral to this. And what we saw, for example, in the current consultations, which are happening in the UK about proposed legislation on imported deforestation, and a similar consultation process on EU potential action on deforestation, is that we've seen tens of thousands of submissions, which, finance is just now part of the discussion. It is just part of the, part of the framework. We saw the UK Global Resource Initiative Task Force report coming out in March, which said due diligence needs to cover finance. We saw the European Parliament report come out last week and says, a future law needs to cover finance. So I think this is an increasing expectation. And I really do urge any bank or investor which is on the record for saying that they care about deforestation to really speak out publicly in favour of these laws as well.
So Emine, I'm curious to hear from you. What would change if there was sort of stricter legislation? What opportunities would that present for for someone in your position or for the fund that you work with, and what challenges would that create as well?
Yeah. So also answering what Shona said, the work we do in Storebrand, it goes. We have been doing this for 10 years, working on deforestation. And there are two tracks. One is related to company engagement. We're working and talking with companies linked to deforestation, whether it be palm oil or beef in Brazil, to improve their business practices. That's one track. The other track that we're working on, and you might have seen this in media, is to engage with governments, have a policy dialogue with governments to improve policies and the regulatory framework. And we've been engaging with the Brazilian government since June this year, mainly because, I'll give you one example. When we've been talking with the meat packers, one challenge is that they don't have access to data. The government is not giving them the data they need. So that's why we're engaging with the government, because they need to set the framework right. Whether we're working on health or environment, we need the governments to play a key role. And to Shona's comment, I think, we are many investors that are concerned about sustainability. And some of the regulations that we see the UK government is coming with, or we saw last week, the EU Parliament is calling the Commission to create new laws. We welcome them, and sometimes we don't even think they go far enough, because they only cover illegal deforestation. In Storebrand policy, we do not make any difference between illegal or legal deforestation, because one example is, for example, the Cerrado. You can legally deforest. I think it's one of the least protected regions in Brazil right now, with less than 3% under legal protection. So many of the companies that we are invested in, they want to go beyond illegal deforestation. So I think there are many investors right now that want the regulatory framework to also support us. We need to move everyone in the same direction. Investors and companies, we can only play our role in a sustainable economy if the right framework is there. And in Brazil, currently, we don't have the right framework.
Right. So that, and that's something that I heard a lot as well when I was speaking to these companies. I mean, I spoke with a sort of sustainability representative from each of these companies and was really impressed at how committed these people were. But it's also, I mean, you start to hear the same thing again and again for years, that they're committed, that things are going to change, and it does seem to, there seems to be kind of everyone sort of throws the hot potato at someone else. The company says it's the government says it's the international community. And so, I mean, I guess one question I want to pose to Hilde is, I mean, when it comes to accountability and assessing these companies and making recommendations, what are the kind of tools and what is the process for trying to figure out how to work with companies, when to cut them, and how do you make sense of all of these kind of different actors and their different versions of what exactly the problem or the obstacle is?
Sarah, I missed part of your question because my internet connection was a little bit unstable, but I see if I can respond to what I think you asked me about. I think that what just to connect a little bit to the previous discussion about legislation, we have not been very concerned whether deforestation is legal or illegal. We have engaged with the companies on the deforestation per se. And I think that's, I mean, legislation is very important, but it's not enough. It's also about enforcing legislation, and that's where very many countries can improve on this. We have been, when we assess the companies, we really, as I said before, we really try to gather data on what's going on the ground. For instance, when we assessed the palm oil companies in Indonesia and Malaysia, we actually tried to get hold of the concession maps and to have engaged with experts who then had overlays on areas where on satellite mapping and other, and see whether they actually were forest and forest in a good condition in those areas. And on that basis, we engaged with the companies. And being, I mean, we also touched upon what works and what not. I think if in our experience, to have a really good conversation with a company, it really needs to be based on facts. And when we present the facts that we have and we have a response, we often get a good conversation, but we also sometimes get no response. And for some of these oil palm companies, it was at the time when it was difficult for them to change the way of practice, or they didn't want to change. And then we decided, or we recommended the exclusion of those companies. That said, then you don't have very much leverage after they are not longer in the fund. So that is also an issue, even though there are companies who want to come back to us and ask, what shall we do to get back into the fund again? So that's, I'm not sure if I did respond to your question, but you can reiterate if there's something I missed.
No, I think that was useful. And that last point that you made about, about if you exclude them, then you've lost your leverage. That's a really important one. I think that we journalists sometimes forget when we're trying to hold companies and investors to account. I remember one ESG investor here in Brazil said to me, the worst thing in the world would be if everyone just stops investing in Brazil and in the Amazon, because then it's the even sort of people with way dodgier practices than the ones that are currently there today that would be kind of calling the shots, and you lose the people who have a long way to go, but at least have a really have a commitment to trying to make change. And one question that we're getting, I'm going to turn it to Toby quickly. We have some people who are interested in hearing a little bit more about how the testing is working with regional banks and integrating this tool. And I wonder if, this tool is very much still being developed, but if you might share a little bit of the details of how that works.
Yeah, maybe I'll just pass that question to Helen, who's been in more of the tests than me. Helen, do you want to take that one?
Yep, so just briefly, in developing the tool, so we've done in-depth user testing with around 30 financial institutions, so covering regional banks, international banks, and investors as well, and that will continue going forward. So some of the applications that I touched on earlier, we'll be working through those with banks and investors who have approached us and who are interested in applying Trase Finance within their existing processes. So that's something we'll be doing going forward. The data is available to download. So it's a freely available tool. You can download the data, and we'll also be developing a public API to enable banks and investors to pull the data directly into their existing risk management systems, because in some cases that will be more appropriate than using a third-party tool. So that, yeah, I hope that answers the question, that it's ongoing, and we see that as a key part of the next 6 months, is working directly with the users to make sure we improve the tool and that it's as useful as possible.
Great, thank you. And one question, as more tools like this start to appear, and more kind of indexes and different methods for investors to start to understand how these companies work more. One of the challenges that Shona mentioned earlier was that you start to get kind of a variety of different indices which seem to have different criteria, and and sometimes they don't all seem to agree on how a given company ranks. And so I guess, Shona, how would we and how would you start to kind of address these discrepancies and try to somehow unite these different indices and provide the most reliable information for decision making?
Yeah, I think that's a really good point. I think the first thing to understand is that firstly, policies aren't enough. So you should be assessing on practice, not on policies. The second is that the standardized tools of climate reporting don't really work for deforestation, because the companies which are implicated in deforestation often have zero deforestation policies. They don't have planned annual emissions due to deforestation. So what you actually need in that approach is that you need transparency and you need accountability. We also know that there's a lot of issues with the auditing of those supply chains. So we actually think the best practice is for that supply chain data to be public. And if a company is saying, we need someone else to provide data so we can even know what our supply chain is, that's obviously not a very sound approach. So I heard that mentioned in the Amazon. I think some of the other things are also about what tools. So, we see banks and, who may have had policies for 5 or 10 years on deforestation, aren't doing what we would consider very basic steps. So in your loan contracts, having a no deforestation clause, for whether it's not just for green finance, but for any finance, saying we as a bank have a no deforestation policy, we're going to write that into your contract. And if you don't follow that, that actually gives us a legal basis to contend with that. I think the other thing is also this shift of, I heard the discussion of leverage previously. And I think the starting point for investors and banks can't be to talk about what's comfortable for the perpetrator of an abuse. Like, the starting point should always be to who is the potential victim of that abuse, who is potentially negatively impacted. So it's not for investors to decide what appropriate leverage is. It's actually to sit down with communities or groups which are working with those communities to understand what they think the most appropriate outcome is. And to also understand that if you're pumping money into a company without drawing a line in the sand about, if you do not do this by this particular time, we are not going to put our money, we don't want to be handling the money from those proceeds or those abuses. So I think this idea of, not saying, well, just because a company isn't potentially as bad as another company in this sector, it really just has to be like, are they involved in abuses? They're hurting people, they're hurting the climate, where is our line in the sand? I think that's a much more helpful approach.
So I want to ask Emine. I mean, she spoke earlier about there being sort of two tracks that that they work with. One of them is working, with companies and engaging companies, and another is working with governments. And I mean, I imagine that it's probably not typical for an asset manager to go and sit down with an impacted community and ask them how they're impacted, and then to use that. So I guess I wonder, how would that even kind of come into the equation in a kind of concrete, practical way?
Well, just to give you an understanding of how I work, I'm the only one covering climate and environment in Storebrand. We are Norway's second largest asset manager. I need to monitor more than 4,000 companies. And this is the challenge I face every day. It's not only the agricultural sector, but it's all sectors on climate and environment. So I rely on NGOs to provide me a report. I rely on colleagues in global Canopy and Trase Finance to help me improve and advance and map our exposure to deforestation risk. So I'm not able to go to Brazil or Indonesia and sit down with communities. And even the work we did with the government in Brazil is very unusual. We never interact with governments directly. But after engaging with companies for several years, we came to the recognition that, look, there is so much we can do. We need everyone to pull in the right direction. So yeah, I don't know if that was an answer to your question.
No, I think that's a really important answer. And I mean, there's, that both shows just how challenging this is, and also, that there is a bit of hope, because you spoke about a role for NGOs, and that, someone like you who is working at a company like Storebrand, you are reading these reports, you are looking at this data that's coming from Trase Finance. And one other thing that you mentioned briefly earlier is the kind of importance of collaboration and dialogue between you and other investors, in your position or in companies that are slightly different, maybe bigger or smaller. And I guess I wonder if you can talk a little bit about what you're seeing in the huge landscape that is all the money that's going to these companies, and how you're talking to colleagues in different places.
So as I said, there are two tracks. We work with company engagement and we work with governments. And in both our strategies, we do this together with other investors. So just to give you an example, on the company side, we are involved in programs under PRI and working with a selected number of companies. And the dialogues I have with the companies is together with other global investors, because if we stand together, we are stronger. People might know who I am in Norway, in Scandinavia, and maybe somewhere in Europe, but when we enter other markets, they don't know who Storebrand is, of course. And we currently set up a program called Investors Policy Dialogue on Deforestation. It's a 2-year work program, and we have 43 global investors with us. They're committed to work on deforestation for 2-year period, and we represent $6 trillion under asset under management, which is 6 times the size as the Norwegian oil fund, just to give you an indication of how many investors we represent. So it is important to stand together and be a global coalition, because we can achieve very little just by being ourselves.
Right, and I want to turn that same question to Hilde, and also add a new one that just came into our chat, which is, we've been talking a lot about kind of risk and exposure, but someone wants to know about the capacity of this tool for sort of positive impact investing, and I wonder if that's a part of the fund, or if there's a way that this tool could be used to kind of identify best practices, and even kind of, I don't know, expand investment in those companies that are doing a good job.
the council is not involved in any investment decision, and the fund also has a very strict investment mandate, which actually is public. It's given by the Ministry of Finance. So and it's mainly an index-based investment fund. So I cannot speak about the impact investing, and I don't
Sure.
think they're into that right now. But I just want to add a little bit to what Emine said. It's about the engagement with companies, and I really, because I think many investors who engage with companies on sustainability issues, they actually are quite well prepared. They read the NGO's report. They may even engage with NGOs on this, and it's really true that when you have an oversight over, I mean, there are 10,000 companies in our fund to look into this. You don't have the time nor the resources to engage with any single community that is hurt by a company, but you can gather information. And we also actually we are fortunate to have opportunities to engage with local consultants to try to find out what's going on and what the issues are on the ground, and we can raise these kind of issues with a company if we work with it and get engaged with them. The fund itself, the fund manager is collaborating on some level, but it's not like Storebrand. And one of the reasons is that it is quite big, it is quite well known, and they are very careful in associating the names with every single initiative. So they select what they think is in line with their investment strategy and with their responsibility, with their task as a responsible investor.
Thank you. Well, I'm going to sort of wrap up really quickly, and then there's one more thing I want to ask Toby to say after this. But first of all, just thank you so much to our panelists for participating, and to everyone who's tuned in as well. We've been recording this event, and we'll share the link if there's anything you missed or if you want to pass it on to someone else. And there were so many questions. We had no way of answering all of them, but we have been keeping track of the ones that we weren't able to answer, and we will respond to them via email. We also really encourage people to explore this tool and share your comments about what's working well, what's not working, if you have ideas for what else could be useful. And also just, I wanted to thank personally to the team that organized this event, to Toby and Helen and Athena, who's been doing all of the technical magicianship behind the scenes. And so I guess I will leave it at that, but I did want to just turn it over to Toby really quickly to address this question of how to use this tool, for positive impact investing. And also, I guess, I mean, Hilde's response made me kind of want to ask you one other thing, which is how to kind of deal with the fact that you have very different profiles of investors who are involved in these companies, and so how does this tool kind of help help sort through all of this very varied profiles? Oh, and make sure to unmute, Toby.
Classic. Thanks very much, Sarah. Yeah, a number of issues there. I mean, I think, to be very clear, I think risk management needs to first and foremost be about identifying where the priorities for action are. And as all of our colleagues in the investment community on the panel have said, it's a huge challenge to filter with very little capacity where those priorities are when you're confronted with a portfolio of thousands. So Trase first and foremost can help in providing that filter, identifying, incidentally, that often the vast amount of activities of a given company or sourcing of a given buyer are actually not linked, in the case of deforestation, to high impacts. So our data find time and time again that the problem is highly concentrated. And once you've identified where the highest risks are, then we need to be working to use data like traces to encourage direct engagement, to identify the problems and agree a course of action to correct those problems. Exclusion is always going to be on the table, but it should be a last resort. There needs to be a pathway towards improving impacts on the ground, sustainability outcomes on the ground. And companies and investors that have sustainability commitments have made a public pledge that they are committing to improving sustainability outcomes on the ground. So the way in which we can do that is by some of these leaders staying in the places that are more problematic and increasing transparency around the actions that are being taken and around the implementation measures that are being made. And then transparency initiatives like Trase can ingest and absorb these data and make evidence of progress, whether it's about activities, but ultimately about deforestation being reduced. And say, for example, a trading company has greater transparency about its traceability of its supply chain, we can easily incorporate those data once they're accessible and if they're standardized and of an assured quality, improve the mapping of that supply chain and thereby reduce the amount of risk that they're associated with. And at the same time, encourage the publication of what those measures are that are mitigating the activities of that company being involved in risk. And so doing, we can drive a more positive cycle where investment is targeted towards actions that are urgently needed to have net positive impacts on the ground and not simply move the problem from being in the hands of one actor to the hands of another. And with regards to the complexity of investors and investment vehicles that are out there, we're just at the start of this journey. And there's so much that needs to be understood. I'm not going to jump to conclusions here, but we would love to have feedback. There's clearly a need for legislation, has been said a number of times, that can raise the floor while individual actors are playing their part to lift the ceiling. And that legislation, and also attempts to harmonize taxonomy of terms and how we define things, all of that can help and provide a common language for understanding when a different player of a different type or a different magnitude is doing something, how can it be compared and added together with the actions of other players. So in the interest of time, we're at time. I'll leave it there. And I just want to thank everyone for having joined. I think in COVID times, we've all been in many discussions online. For me, this was one of the more dynamic and engaging ones that I've participated in particular, thanks to you, Sarah, for really excellent sharing and an excellent diverse range of views and a fantastic range of questions coming in. And we'll endeavor to answer those individually as best we can. Encourage everyone to get in touch, however critical, not just supportive, but critical you may be of our work. You're the people that we'd like to learn from and understand the most. So thank you all and have a good rest of your day.
And just one more message from me. There's a survey that should appear somewhere on your browser if you don't mind just filling that out. And thank you all very much. Obrigada, gracias. And I don't know how to say thank you in Indonesian, so I'm really sorry.
Terima kasih.
There we go. Thanks very much.